Welcome to AG John Show. Today is not about hyper headlines. It is about a structural shift that most people will only notice after it is too late. What you're about to hear will sound uncomfortable if you still believe silver is a sleepy metal that just follows gold around. That belief is exactly why this moment matters. Something changed the rules for silver heading into 2026, and it did not happen on a price chart. It happened at the intersection of politics, debt, trade pressure, and a returning American industrial strategy. When Donald Trump stepped back into the center of the political conversation, markets did not react emotionally at first. They reacted mechanically, quietly, and in places most people never look. Silver is one of those places. Not because Trump gave a speech about silver, but because of what his economic posture forces the system to do. Trump's approach has always been transactional rather than theoretical. He does not care about elegant models. He cares about leverage, supply chains, and who controls them. That mindset collides directly with the current state of the global economy. The United States is running deficits that cannot be normalized without consequences. For years, those consequences were postponed with cheap money and global cooperation. That cooperation is now fraying at the edges. Tariffs are not just taxes, they are signals. They tell corporations where the future cost of doing business will rise. When tariffs rise or are threatened, companies rush to secure inputs before the rules change again. Silver sits quietly inside that scramble. Silver is not just a monetary metal, it is an industrial necessity. It is embedded in electronics, solar panels, military hardware, and advanced manufacturing. Trump's version of America First accelerates demand in exactly those sectors. That demand does not show up overnight, but it locks in future pressure. Here's where most analysts get it wrong. They look at spot prices and assume nothing is happening. The real action is in procurement contracts, stockpiling behavior, and strategic reserves. Those moves are invisible until supply tightens. Trump's policies are inflationary by design. Not reckless inflation, but targeted inflation that shifts bargaining power. When the cost of imported goods rises, domestic production becomes attractive again. Domestic production consumes silver. The green energy transition never slowed down. It just became less fashionable to talk about. Solar expansion alone is a silver sink that cannot be substituted easily. Now add military rearmament to that equation. Geopolitical tension increases silver demand in ways that never make headlines. Trump does not need to announce a silver policy for silver to move. He only needs to pull on threads that already exist. Debt is another one of those threads. The United States cannot cut spending fast enough to matter. Interest costs alone are becoming a political problem. That pushes policymakers toward financial repression. Financial repression always favors hard assets over paper promises. Silver lives in that shadow. Gold gets the speeches and the respect. Silver gets the utility and the surprise. Historically, silver lags gold until it does not. When it moves violently. The setup for 2026 is not about a single event. It is about cumulative pressure with no release valve. Trump amplifies that pressure by removing the illusion of global harmony. Markets hate uncertainty, but they love preparation. Smart money prepares quietly. It accumulates before narratives form. Retail money waits for confirmation. By the time confirmation arrives, the move is already extended. This is why timing matters more than prediction. You do not need silver to go to a specific number to understand the asymmetry. Silver is small compared to other markets. That makes it fragile under stress. It does not take trillions of dollars to move silver. It takes a change in marginal demand. Trump's return reshapes marginal demand, not because of ideology, but because of reaction. Corporations hedge political risk long before voters do. They lock in materials inventory and optionality. That behavior tightens supply. Tight supply turns small demand changes into price shocks. Most people are still anchored to the last cycle. They remember silver failing to hold gains. They forget that cycles do not repeat cleanly. They evolve based on new constraints. The constraint now is trust. Trust in currencies, trade agreements, and long-term stability. Trump thrives in low-trust environments. His presence accelerates fragmentation. Fragmentation benefits assets that do not rely on counterparties. Silver qualifies. There's also a psychological element. Silver has been written off too many times. When an asset is ignored, positioning becomes light. Light positioning creates explosive potential. The mistake is waiting for permission. Markets do not give permission, they give consequences. By the time headlines scream about silver, risk has already increased. Early positioning is about patience, not excitement. This is not about betting on Trump personally. It is about understanding what his economic gravity does to systems. He pulls volatility forward, he compresses timelines. What was once a 5-year adjustment becomes a 2-year scramble. That compression benefits prepared holders. 2026 is not far away in market terms. Procurement cycles are already being set. Budgets for infrastructure, defense, and energy are being allocated now. Silver demand is baked in before price reflects it. Paper silver markets assume liquidity that may not exist under stress. Physical silver exposes that assumption. When confidence wobbles, paper claims get questioned. Physical supply becomes king. Trump's rhetoric around strength and independence reinforces that behavior. Nations think in stockpiles, not spot charts. Central banks talk about gold publicly. Silver moves behind the scenes. That is why the opportunity feels quiet. Quiet does not mean small. Every major silver move in history started with boredom. Then came disbelief. Then came panic. You do not want to enter at panic. The game changed not with an announcement, but with alignment. Politics, debt, industry, and psychology aligned. Trump is the catalyst, not the cause. He just removes the delay. If you wait for clarity, you will get price instead. Price clarity is always expensive. The people who benefit are the ones who act when things feel uncomfortable but logical. That window does not stay open long. Silver does not ring a bell. It slips away from consensus. That is why this moment matters. Not because of noise, but because of structure. The next phase will feel sudden to those who ignored the setup. To those watching closely, it will feel inevitable. And inevitability in markets is always recognized too late by the majority. What makes this even more dangerous is how calm the surface still looks. Calm markets breed complacency, and complacency is how positioning becomes one-sided. Silver is not priced for stress right now. It is priced for continuity, for a world where supply chains behave and currencies remain believable. Trump's presence injects doubt into that continuity. Doubt forces hedging behavior long before it shows up in consumer prices. Look at how corporations act when policy uncertainty rises. They do not wait for elections to finish. They front-load decisions. Inventory cycles shift first. Then procurement contracts lengthen, locking in metal supply ahead of time. Silver supply is not flexible. Mines cannot ramp instantly, and above-ground stockpiles are thinner than people assume. Recycling does not save the market either. Industrial silver is often dispersed and unrecoverable at scale. That means demand shocks travel straight to price. There's no buffer once the pipeline tightens. Trump's economic stance also pressures the dollar in subtle ways. A strong dollar policy collides with massive borrowing needs. You cannot have both indefinitely. At some point, something gives. If rates stay high, debt service explodes. If rates fall, currency credibility takes the hit. Either path benefits hard assets. Silver benefits disproportionately because it sits at the crossroads of money and manufacturing. Most investors separate those worlds in their minds. Silver refuses to stay in one category. This dual nature is why silver is volatile. Volatility scares people away, which ironically sets up the next move. When positioning is light, moves accelerate faster. That is physics, not opinion. Trump amplifies this by changing expectations faster than supply can adjust. Markets move on expectations, not facts. The expectation forming now is fragmentation. Fragmentation means redundancy, reshoring, and stockpiling. Every one of those consumes silver. None of them reduce its importance. Another mistake people make is assuming substitution will cap silver demand. They believe technology will simply replace it. That belief ignores performance limits. Silver is used because it works, not because it is fashionable. In electronics, efficiency matters. In military systems, reliability matters more than cost. In solar, conductivity matters. You can tweak designs, but you cannot eliminate silver without sacrificing output. Trump's emphasis on energy independence does not reduce renewable build-out. It shifts control over where it happens. Domestic production uses domestic supply chains. Domestic supply chains pay domestic prices. That matters when global arbitrage weakens. Regional pricing power increases. Silver thrives when arbitrage breaks down. A single global price assumes frictionless flow. Trump introduces friction. Friction creates spreads, shortages, and premiums. People underestimate how quickly trust disappears. One policy surprise is enough to make participants defensive. Defense in markets looks like hoarding. Hoarding tightens availability without changing production. This is how squeezes start quietly, not with headlines, but with small mismatches. Paper markets smooth over those mismatches until they cannot. Then repricing happens fast. Silver's paper market is large relative to physical. That imbalance is not stable under stress. You do not need a conspiracy for this to matter. You only need rational self-interest. If you hold a claim and question delivery, you reduce exposure. If many do that at once, the system strains. Trump's style increases the probability of those moments. Surprise is part of his leverage. Markets hate surprise because it forces action without preparation. Silver rewards preparation. Another layer to this is geopolitics beyond the United States. Allies hedge American politics too. They diversify reserves quietly. Gold is public. Silver is discreet. Smaller nations cannot move gold markets easily. Silver offers scale without attention. That flow never shows up in Western commentary. By the time it does, it is old news. Media narratives always lag positioning. That lag is where opportunity lives. Think back to past silver runs. They never started with universal agreement. They started with confusion. Analysts argued why silver should not move. Those arguments sound intelligent, right, until price invalidates them. Right now, the arguments against silver are plentiful. That alone should make you pause. They say inflation is coming down. They say technology reduces metal usage. They say silver underperforms gold. They say it is too volatile to trust. Every one of those statements can be true in isolation. None of them negate structural pressure. Markets do not move on absolutes. They move on margins. The margin for error in silver is thin. Supply cannot absorb large shifts. Trump reduces the margin for error everywhere he touches. That is his effect. You do not need to like him to understand that. You only need to observe behavior. Watch how defense budgets are discussed. Watch how infrastructure spending is framed. Watch how trade partners respond preemptively. Those reactions matter more than speeches. By 2026, many of these decisions will be irreversible. Contracts signed, factories built, supply locked. Price will adjust to that reality, whether people agree with it or not. The danger is assuming time is abundant. In markets, time compresses suddenly. Long periods of nothing are followed by short periods of everything. Silver lives in those short periods. Miss them and you miss the move. This is not about chasing rallies. It is about owning optionality before it is expensive. Optionality in silver is cheap when nobody wants it. That is now. Once volatility returns, optionality gets repriced violently. That is later. Trump's presence shortens the distance between now and later. He accelerates decisions that were already delayed too long. Debt, energy, trade, and trust are unresolved problems. He brings them forward. Silver is downstream of all of them. It absorbs pressure silently. People waiting for confirmation will get it in the worst possible form. Confirmation comes as price gaps, premiums, and scarcity narratives. At that point, the question is no longer whether to act, but how much damage has been done. Preparation feels boring until it feels brilliant. Regret feels loud and permanent. Markets do not care about fairness. They reward foresight, not consensus. Silver does not announce its moment. It takes it. And when it does, explanations follow after the fact, pretending it was obvious all along. The people who benefit are the ones who acted before it felt obvious. That is the entire game, and Trump just tilted the board.